US-China trade war has far-reaching implications, even for nations like Indonesia that are not directly entangled in the conflict. As these two economic giants grapple with tariffs and trade barriers, Indonesia finds itself navigating a turbulent economic landscape marked by declining export prices and heightened capital market uncertainties. The plummet in commodity prices, particularly for palm oil, nickel, and coal, casts a shadow over Indonesia's economy, leading to decreased state revenues and concerns about the long-term stability of its fiscal health. As global demand wanes, Indonesia's Composite Stock Price Index (IHSG) faces downward pressure, with the threat of falling below the critical 6,000 threshold. Businesses are gripped by fear as stock prices fluctuate amidst the uncertainty, reflecting a broader trend of investment hesitance. In this climate of unpredictability, it is imperative for Indonesian policymakers to identify growth opportunities that can counterbalance these adverse effects. One such opportunity lies in attracting industrial relocations from China, as companies seek refuge from exorbitant tariffs. With the right incentives, Indonesia can become a magnet for new investments in key sectors such as textiles and green technologies. By streamlining investment permits and offering tax breaks, Indonesia could replicate Vietnam's success in drawing foreign manufacturers. In addition, the risks posed by indirect U.S. tariffs on Indonesian goods highlight the fragility of the country's trade surplus with America, raising alarms about potential retaliatory measures that could further destabilize export markets. Indonesia's response to the trade war necessitates a multifaceted approach. Diversifying markets beyond traditional partners, such as enhancing trade relationships with Middle Eastern nations, could serve as a safeguard against overdependence on specific economies. Additionally, the focus on downstream industrialization, transforming raw materials into higher-value products, holds the promise of reducing reliance on commodity exports and fostering sustainable economic growth. Nonetheless, external factors such as China's export restrictions and the demand fluctuations for Indonesian commodities pose challenges that require careful management. The interconnectedness of the global supply chain means that Indonesia must remain vigilant against disruptions that could cascade through its economy, impacting food prices and overall market stability. In conclusion, while the US-China trade war presents significant challenges, it also opens doors for Indonesia to fortify its economy, if approached with keen awareness and strategic foresight.